Hello, my name is William F. Paulson, president and owner of Grifco Recovery LLC. I wanted to personally thank you for applying for a position with Grifco Recovery LLC. It is approximately 5 a.m. Central Standard Time, Monday, March 1st, 2021. The job postings for judgment buyer, judgment qualifier, and area manager were published early February 26th of 2021. Excuse me, I'll be clearing my throat. I'm kind of a little sick this weekend. I'm happy to say that we have received over 250 applicants for these positions. I'm even happier to say that it is going to take all of you and even more to achieve what I envision for Grifco Recovery LLC. You see, if you haven't noticed already, this is a highly unique type of business. I do not want to I do not want to sit here and try to sugarcoat anything or sell a dream to you that falls short. These are all highly rewarding occupations. And yes, like any other job you have ever had or wanted to have that exists in the job market today, these positions all have downfalls. So I wanted to take this time to really just point out all of the negatives of these positions. Since there are so many of you, I decided to make a quick soundbite video to send to you all. And after you listen to this, if you still want to fill these positions, then we will commence forward. After hearing this, if you have any kind of reservations and you think I can answer those things, then reach out to me. If not, I encourage you withdraw your candidacy to these positions effective immediately and move on. So let's get into it. The worst part of getting into these positions is you only get paid on the judgments that create revenue. Each judgment is self-financing. So what does this mean? It means that when we acquire the judgment, you only get paid on it if the judgment makes money. Now, the worst part is it takes time because everything that is done to collect money on the judgment is all done through legal channels and the court systems. Time is always allowed when people are forced to answer, so we just sit back and wait. Another downside is one that has brought some of you to this situation, which is obviously the pandemic. The pandemic has displaced a lot of debtors from their incomes and assets. So there are less we will get paid on and or will be limited to less revenue per judgment. Good news is most of the places we are working, there are still a lot of people working. First area I want to get done is the Midwest and the Rust Belt, as well as a couple southeastern states. Plus, I think things will get better in the next year or so. Over the years, I have developed both scar tissue and the most effective ways to effectuate a judgment in regards to cost and success. I finally adopted a non-conventional way of doing things this way, which tore down barriers. This all took time, money, emotion, and sacrifice. And because of that, Grifco Recovery LLC is experiencing geometric growth in the middle of a pandemic when other businesses are closing. So let me give you the worst case scenario. Let's say you take the position. You watch the training videos, you master the phone scripts, and you get to work. You find the judgments, you qualify the judgments, and if you are a buyer, you buy the judgments. Well, now what? You get that info over to the vice president of the company. She will then look it all over to make sure you are not missing anything. She will then prepare or direct the preparation of the assignment of judgment and purchase agreement paperwork done, and that gets sent off to the judgment creditor. These get physically mailed out unless the original creditor says they can print off the PDFs that she will email out to them. Once we receive the paperwork back, it goes to our lawyers. Our lawyers, by default, automatically file a motion for the debtors to answer an order. About 70% of them reply. If they do not, our lawyers make a motion to a judge about this. Our lawyers then obtain an order from the judge for the debtor to answer. Oh, I almost forgot. What are they replying to? They are replying to an interrogatory. I don't know if I'm saying that right. It's basically an order outlining everything about their finances, like where their source of income is coming from, where they bank, all of their assets, and any money that is owed to them by others. It's highly invasive, intrusive, and most importantly, effective. So if they do not answer after they are served with a judge's order, our lawyers go back in, tell the judge. The judge will then hold them in contempt and issue a warrant for their arrest. When they are arrested, the judge decides on a bond amount, typically $250 to $750, but usually around $500. It doesn't matter if it's six figures or $10,000 or whatever the judgment is. So if the debtor pays the bond themselves, our lawyers apply to get it, and they do so. We now become their bondholder. As their bondholder, they have to comply, or we just tell the judge again. We find out where their money is at. Typically, they make a deal for them to pay, or they just go in and wipe them out with the information that they're forced to give us. So now, does it ever go that far? Yes, but it's on the rare side. Okay. Most people comply because who wants to go to jail over a judgment? I mean, seriously, would you? I don't. So this all takes time. Sometimes it takes several months. So you do all this work without seeing any money for quite some time. The other thing is some of these judgments, you see money in like 60 or 90 days, quite a few of them you do, because, when you get something like that, they're just going to fork over money. Trust me, you'll see it. So you do all this work without seeing any money for quite some time. It's all about like time. This is a slow rolling gig. It's also a volumes thing. Obviously, the more you do and the more you get done, the more you will be paid at a later date, because it's, some of these deals, because you're only getting like 5% net or 10%, depending upon what you do. Or if you're a buyer, you're getting like a quarter, or you're getting like a 30% net or 40% net. But it depends on what we buy it at. And we get into that here shortly. There's just so many of these judgments. Okay. In South Dakota, there's more judgments than there are people. And it's like that in every state. So anyways, I'm getting a little off cuff here. So I just want to lay it all out for you. You get paid as the judgments earn. All right. So if you are not patient and do not plan upon sticking around, then you should look elsewhere. Okay. I'm just trying to, because my time is, there's only so much time in a day. All right. Having said all that, I'm happy to say that our revenue success rate on these judgments is between 60 and 70%, pandemic or not. Think about it. If you do not pay your electric bill or your cell phone bill, are you going to receive a possible order from the court to tell us where your money is at so we can take it? No, it's just, that's what I thought. And those orders, we are able to find out property to lien and levy and wages we can garnish. That's kind of repetitive. Let me just tell you, I personally got into the insurance business right out of high school. I never went to college. I thought it was a scam for most when I was a senior in high school. Anyways, to get in the insurance business, you have to have a clean background. You have to study for some tests. You have to pass the tests in order to get your licenses to sell. You also have to pay for all that stuff with no guarantee of reimbursement. Then you have to try and sell the insurance in a saturated market. Everyone and their uncle is selling insurance. You get to hear the infamous, well, my brother-in-law sells insurance, or our Main Street insurance guy sells that exact same thing you're trying to sell me on the phone. Oh, and you have to dress up and drive and are restricted to the farthest you are willing to travel. And you have to maintain your licenses. I designed this entire system with an insurance professional in mind because I used to be one. I still possess several licenses. Now, if you were to sell something, not all of them make it through underwriting, or they take some time to get approved. So why do I even bring this up? And the insurance stuff, because you do not need to do any of those things. This is such a sweet gig. You don't need a license. You don't need to pass a test. You don't need to study. You don't need to compete. You don't need a college education, and you don't need a squeaky clean background. You don't need to deal with the harshest parts of this business. You don't even need to do paperwork. You just have to sit in front of your computer in your home or your office and look at public record and compile it. Then look at the parties involved and check out their Facebook, their LinkedIn, their info on consumer databases and on Google. And if you are a buyer, You may have to do all of those things I just mentioned, but then also call the original creditors and try and buy the judgment from them. So when it comes to buying, think about this for a second. Let's say someone screwed you over. So you spent time, resources, money, and emotion to sue them. After a few years, in most cases, several, you get a random cold call out of the blue. Someone on the other line gives you an earful about getting some money and revenge for your old judgment. That person also tells you that they will be the only person uh, they will ever hear from, and that their judgment is one of millions in their state. What do you think they are going to do? Anyways, in the judgment buying business, you are really the only one that the original creditor will ever hear from, almost 100% of the time. I mean, I hate seeing, advertisements for 99.99, but this legitimately is one of those situations. It's not 100% of the time because out of the tens of thousands of calls I have made and others on my behalf, um, I can count like 2 times where another company called the creditor, but because they were high 6-figure judgments that had immigrated down to their state, or they were a low 7-figure judgment. Now, don't get me wrong, those big ones exist and we can get them, but they are always complicated and bankruptcy is typically a factor. I am also happy to say that this is all streamlined. We have adopted the McDonald's method. So we have one person finding them and maybe qualifying them. We have some buyers that just do the calling only. And wanted to say it's typically takes. I wanted to also mention that when you're qualifying one of these judgments, it typically takes 2 to 10 minutes. If there's a lot of stuff you have to attach to it or something, it'll get in that 10 minutes. But if there's like an article in news about the debtor or the creditor and it's related to the judgment, you don't have to read all that stuff. All you got to do is copy and paste the link and just put it in the report. So you may discover the debtor filed bankruptcy or the creditor died, so it's on to the next one. So you might only look at that judgment for like a minute or something. Okay. You don't have to deal with the debtors ever. You do not have to do any paperwork, the interest tracking, or anything like that, or the debtor's attorneys in the event they lawyer up. I wanted to also take this time to talk about compensations. What's the percentages? How does it work? How do I get paid? All this stuff. I wanted to be very transparent, okay, in this video. Now, this is kind of confusing. The way it works is if you are a judgment qualifier and you go into a state database and find the judgment, that is 5% of the deal. If you qualify the judgment, you get another 5%. And if you are able to concrete verify where the debtor works, that's another 5%. So you're going to get anywhere from 5 to 15%, just like my ad said. All right. If you how would you find out where they are employed? You can actually verify where they are working. So let's do an example. You find the judgment that meets our criteria. You then qualify it to make sure it's good. And in your qualifying, you find out where the debtor maybe works. So you call the debtor's work and ask to speak to them. Whoever answers the phone, once they confirm they are there, then you can say, oh, I didn't realize this was a work number. I will call them on their personal cell. I don't want to bother anyone at work. Then just hang up. This doesn't happen that often because it's your discretion and you still never spoke to the debtor. Now, that's rare that even happens. So in some cases, as a judgment qualifier, you will specialize in just going into a state database, and I call this phase 1, and find them only and attach yourself on 5% only, which is a pretty sweet deal. It's like an annuity on your work. So if you are a phase 2 qualifier, you will get paid on the qualifying of the parties involved. You see what I'm saying? You may only do phase 1 or phase 2. If you do both, you will get 10%. If you just do one of these two, you will get 5%. If you do both and can actually identify where the person works and confirm it, you get 15%. Now, a very common example of that, it just came to me. A lot of people put everything on social media I can't stand that personally. So a lot of people put stuff on social media. So they'll take a stupid selfie with someone that they work with, and they'll tag like, oh, look at us at work. We hate our lives. And you can find out where they work. Okay. Or they badmouth their work on social media or something. So anyways, now your contractual percentages are all based upon net profits of the judgment. Now here is the order on how the judgment is paid out. Our lawyers typically get 25 to 33.33% of the judgment right off the top. Then the money that is left over, Grifco Recovery LLC retains the money that was invested into the judgment. So for example, if the creditor was paid, say $50 initially, or was paid 10%, then that amount is set aside, a contingency amount. In addition, the collection expenses that the lawyers billed us for get paid back to Grifco immediately too. So examples of this would be like filing fees paid to employers and banks for garnishment service fees, like through the mail, or in some cases, a sheriff or process server who bills us. And those are usually minimal. All right. So let's say our lawyers do a bank levy of say $3,000. They get their fee, which leaves $1,998. Then Grifco Recovery retains the fee amount that had to be invested into the judgment, say around $100, because we had to have a sheriff serve them with that third warning. And 100 is actually high, but I'm just giving you a conservative estimate here. And it's only usually initially those expenses, because in months 2 and 3, depending upon the state statutes, there won't be any of those expenses, except some minor postage expenses. Okay. But this is a conservative estimate, which might be a 20% contingency. So then the buyout amount, which might be a 20% contingency to the original creditor. So we pay the original creditor 20% of 1,898, which comes out to $379.60 they will receive. Now this leaves $1,518.40. You then get your contractual percentage of 5 or 10 or 15%. So if you did phase 1 and phase 2, you get $151.84 on that judgment. If you were the buyer and you did not qualify the judgment at all, and you bought it at 20% contingency, you get 25% net of the deal, which is $379.60 is what you would get as the buyer. Now, most of the judgments are set up in an auto pay or wage garnishment or wage assignment. I call them trickle pay. So if the garnishment is $400 per month, then the math would be, for the same example, it would be $266.40 after the lawyers are paid, then reimburse the upfront fees to Grifco, which is, $166. So you take 100 off the top, which, like I said, that only happens in the right off the bat. So even if it's like that small amount, the net profit's $166.40. You pay the 20% to the original creditor, which leaves $133.12. So if you are the 10% qualifier, you get $13.31, and if you were the buyer, you get $33.28. Now, keep in mind, for that one case, the fees won't apply in the next few garnishments, so the $100 would not have to be retained. Now, if you were a buyer that qualified the judgment, you would get $53.24. Another example would be if you were a buyer that didn't do phase 1 but qualified the judgment and did phase 2. Then you would get $39.93. And so for those of you that are going to be judgment buyers, I'll be sending out a separate video here in the next couple days, just really explaining it with the screen and everything. Okay. So just breaking down the numbers, it's like a high volume thing. So if you're qualifying judgments, this is never ending. These never run out. There's millions of them. And my goal is to have a path to every state in the next few years. And so it's going to require an entire army of you people to do what you're contractually going to get paid to do. All right. So moving on. So just to break down the numbers Like I said, this is technically Monday 1st. It's about 5:15 in the morning here. Over 250 people of you guys have applied for these positions over the weekend. I anticipate we will need more and we will get more. So if you are still wanting to do this, I will hold you to your word. If you tell me you want to do this part-time and give me the hours you plan to do, then I'm going to hold you to it. Okay. A lot of people lack patience in this day and age. If you can be patient and stay focused, the money starts rolling in and it just builds and builds. Okay. This is a passive and a residual income position. If you don't know what those things are, I keep forgetting. Not everybody's was in the insurance business because, like I said, I mostly try to recruit insurance agents to do this. So you should look those things up to see just how cool they are. This is a 1099 position. For those of you that applied for the area manager positions, you will be tasked with some R&D in these new areas we are entering. So if you are still interested, please go ahead and send me a message on Indeed, just titled "Still Interested." Then tell me the times you are available to do this work. Also, please confirm that you have or can get Facebook, LinkedIn, a Gmail account, Zoom, and TeamViewer. I wanted to end with this. This is kind of personal. I just turned 35 and I want to be done working at the age of 40. I know a couple of you are going to go the distance with me. My goal is to remain on as president or chairman and then turn the reins over to someone as ruthless and savage as me. I'm rooting for you. Let's make some money. Talk to you soon.